The Canadian M&A market entered 2025 under pressure. Tariffs on the horizon, inflation still biting the lowest deal count in 2 decades. But by mid-year, things kind of turned around. Deal making had started at least to surge. Let's talk about that with Deep Khosla, head of Canadian Investment Banking Division at Bank of America. Thanks for joining us today.
Nice to be here, Rob.
When would you say things started to turn around, and was there a reason you saw that it started to turn around?
Yeah, well, I think the last couple of years have been pretty quiet, not just Q1. You're right, Q1, there was a lot of uncertainty, and the market does not like uncertainty. But when inflation started to come under control, that helped the markets, the debt markets, rates came down a bit, which helped equity valuations. And when those two things fell into place, ease of funding kind of let people feel more confident in the boardrooms and started to go after some deals. And it just started to feed on itself.
Why do you think then, previous to the uncertainty settling in when Donald Trump got elected, you were still seeing sort of low activity?
Well, it had been low for a couple of years, like I said. Inflation was a big driver. The other thing was equity market valuations were not great, which is a real driver for buyers. When their stocks aren't very high, they don't want to be using that as a currency in that situation. So that really started to change as the markets got stronger.
Are you seeing certain sectors have more M&A than others?
Sure. Well, I mean, Canada's got great companies. We've got a lot of things that people want, not just resource-wise, but industrial, retail, as well as service, telecom, et cetera. So, yeah, all of those. It's very, very broad-based activity, which we've seen all year, which is terrific.
Are there certain sectors that are standing out to you for that?
Oil and gas for sure, mining for sure, but our telecom companies, both inwards and outwards, have had a lot of interest and activity. We've seen retailers also flex some muscles going south and international. So it's a good news story across the board, to be honest.
What does foreign investment look like in Canada?
It's been incredibly strong, and it's actually a big theme because as activity has grown and interest has grown, our currency is still pretty weak. Rates here are relatively low, and there's like $2 to $3 trillion literally of money on the sidelines that are looking for deals in the hands of private equity firms. So there's a lot of interest in Canadian companies. We have a lot of things that people want. And so it's kind of time to be vigilant, as well as being happy that there's activity. We've got to be vigilant and make sure that we're taking capital that's constructive and not predatory, if you will.
I'll talk about that in a moment. I just want to ask you, are there certain parts of the world that seem to be more interested in Canada lately that perhaps weren't before?
I'm actually seeing it quite across the board, both Europe, but the States, of course, there's always interest. We're so close to trying to be advantageous in some cases, but Asia, Europe, no, we're really seeing it from everywhere.
Okay. You mentioned, of course, there's the good money and then there's the predatory money, right? Because I'm sure there is some risk with opening up Canadian companies to, outsiders, foreign. We know that Ottawa wants certain industries in the country protected. Where do you see that threat, or if you could outline some of the risks involved with opening Canada to foreign money?
Well, we want decisions to be made here. At the end of the day, we want to keep our boardrooms here. It's good for the economy to have head offices here, and we want to be the masters of our own, future to some degree. But our companies need money to grow. So there's a real big difference between, activist money, predatory, like I said, predatory capital, and constructive capital. We've seen, and this is where, I'd like to think a bank like ours can really be helpful to our clients, and that is we've got the #1 defense business across the street, which is active in Canada as well as in the U.S. But we also are helpful to our clients in structuring deals to make them, to make them better for our clients. Like, a great example is Rogers getting the $7 billion investment from Blackstone. Super helpful capital, very constructive and structured in a way that Rogers is really retains full control over their destiny.
So are you advising your companies that you do advise to be more defensive in nature in taking on investment?
Oh, not strictly defensive, because there's some great opportunities as well. So we're just want people to be vigilant, and sometimes deals can look good, and let's make sure they are good.
Okay, so what do you foresee for the rest of the year, maybe the start of next year, as far as mergers and acquisitions go?
We see continued activity. Right now, globally, we are ahead of the 10-year average pace. We started the year 10% lower than the 10-year average. We're now almost 30% higher than the 10-year average on a run rate basis. We expect it to get to grow even further. And like I said, there's still $2 to $3 trillion of money on the sidelines looking for deals. Rates are still very constructive in Canada. Equity market valuations are great. Companies are using stock to make acquisitions. So all the fundamentals are there. There's still some uncertainty, but it's kind of more at the margin now than what we read about every day. And so, there's a lot of room, we think, for this to run.
And that being said, we talked about which sectors seem to be the biggest for this kind of movement. You mentioned resources, so oil and gas, for example, mining, perhaps. Do you think that any forward activity will still be in sectors like those?
Again, I think with $2 to $3 trillion on the sidelines, they're looking at everything.
They'll be across the board.
Exactly. Like healthcare is getting a lot of interest, a lot of technology. Obviously, AI is huge. We've got great homegrown tech industries and presences in both of those spaces. So a lot of interest here.
Got it. Appreciate you coming in. Thanks very much for your time.
Thank you, Marella.
All right. Deep Khosla, head of the Canadian Investment Banking Division at Bank of America.